Bajaj Auto posts an inline second quarter, that is, market share sequentially increases from 13% to 20%. The management tells CNBC-TV18 they saw record revenue and EBITDA in the second quarter and growth will be maintained going forward despite muted festive demand. That fires up the stock.
Shree Cement second quarter numbers misread expectations. The volumes and the blended realizations disappoint, while the EBITDA per ton comes in at 28-quarter lows. The management remains confident of 10% volume growth in FY23, says that demand is likely to improve from the second half of November.
Tata Elxsi sees cuts of over 6% after constant currency revenue growth drops to 4.7% compared to an average of 7% over the last 4 quarters. Just Dial's revenue, however, crosses the 200 crore mark after 10 quarters. EBITDA too improves over the last 2 quarters.
Butterfly Gandhi Mathi slips after the profits, revenue and EBITDA all fall in the second quarter. Margins to contract. Oberoi Realty 2 slips after the debt rises by 460 crore rupees to 2,000 crores. Net cash flows is at its lowest in the past 12 quarters.
Consumer durables and electronics retailer Electronics Mart makes a stellar debut on D Street, lists at a premium of over 45% to its issue price of 59 rupees a share.
Well, hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, it's a good start to trade, right? Everyone was talking about the US markets ending in the red, but as we mentioned earlier today, it seems that the Indian markets preempted that maybe there'll be some trouble or some turbulence in the US markets. And as we speak, actually, we're at a very, very crucial juncture because we're on the verge of moving above the 20 DMA on the Nifty itself. So let's see whether or not we can get past that. Remember, in Friday's trading session, we got past that intraday. And then, in fact, we did give away the advantage. So keep an eye out on that mark. The 20 DMA, we're exactly at that spot, 17,240. The bulls will like to take the market a little bit higher from here and trade above the 20 DMA. But let's find out, from our expert. We have Shilpa Rout who joins in. Hi, Shilpa. Well, I recall the last time around when you were saying the Nifty is likely to see a bit of a correction. We did get that. We moved all the way to around the 16,950, but we bounced off there. Shilpa, what's your view at around this 17,240 odd? Do you believe we have enough to head back towards 17,500? Or do you think we're likely to go and retest the recent lows?
Good morning, Nigel and Mangalam. Like I've always been mentioning that Nifty is in the range of 17,000 to 17,400 now. So either side, a decisive breach and sustenance will see a further 200 to 300 points up move or down move. So for now, 17,200 if it is holding, then for intraday also you could look for targets of 17,350, but the condition comes that 17,200 should hold. Likewise, Bank Nifty, it is approaching 40,000 right now, which is the resistance. So I would suggest not to jump in for a fresh buy right now and wait for intraday dips again towards 39,500 or 39,400 zones.
All right, we take that point, Shilpa. But on Friday as well as today, what's standing out is the way the mid-cap index is underperforming. In fact, over the last few trading sessions, we've seen the mid-cap index underperform the large caps. And that usually happens when the street has no confidence over up moves sustaining on, the large cap indices, or at the same time, maybe a risk of further downside from where we are right now. What do you make of individual stocks and what do you have on your list?
Correctly said, Mangalam. Actually, Nifty is definitely moving in the range, but yes, the selling pressure on higher levels is very, very brutal. On Friday, we saw 17,350 odd. We tried to manage, we opened gap up, but then again in the last hour of the trading session, we gave up all the gains. So that means that there is some sort of weakness looming over, and VIX is also, hovering around 20, which is definitely a cautious stance. So for me today, of course, I'll be having 2 buys, and Bank Nifty, since it is performing very nicely, so my buys would be from Bank Nifty 1 and 1 would be from IT sectors, a contrarian, of course. For Bank Nifty, I would suggest, to go for Kotak Mahindra Bank. It is trading at 1850 zones now with a stop loss of 1825. One should look for targets of 1885 to 1900 zones. And another buy would be Tech Mahindra. It is trading at 1016 now. Look for targets of 1033 to 1048 with a stop loss of 1000 or maybe 999 on the lower side.